702 Afternoons
with Relebogile Mabotja.
It is 6 minutes to 2 o'clock in our finance feature for today. We're talking about a terminal diagnosis and it forcing urgent financial decisions. We're joined by Akhona Modi, who's a certified financial planner at BDO Wealth. 011-883-0702 and the WhatsApp line 072-702-1702. Akhona, welcome to the show. Thank you so much for joining us.
Good day. Thanks for having me.
Akhona, let's jump straight into it. If you were to estimate, would you say there are enough South Africans that have measures in place for a terminal diagnosis?
Thanks for the question. In my experience, almost more than 60% of South Africans don't have plans in place in terms of making provision for terminal illness or what we call severe illness.
And when we say measures in place, can you share what that looks like?
So that would typically look like taking out a severe illness cover that would be sufficient to provide cash to you during your period of being ill. And the period of being ill could be prolonged, for example. It could be 6 months to 12 months, for example, even longer. And the question is, how do you then provide for your lifestyle during that period? Right? So you take out a life policy or a severe illness cover to make sure that there's sufficient liquidity in place to maintain your current lifestyle.
So maybe help us understand why is the concept of, well, government hospitals are free insufficient? What does the product actually do for you?
So the product, in the event, for example, if you have stroke, or diagnosed with cancer or any other qualifying illness, you would put in a claim, right, for that particular illness, and would provide a lump sum amount so that you cover, for example, you might have a medical aid in place for those who are fortunate enough.
Yes.
But often there are medical rates that the medical aid pays at versus the hospital rate, right? Often there might be a shortfall, and you use those proceeds from your severe illness cover to cover the gap, because medical expenses can be quite expensive.
Yes, I think also what's quite important, and maybe you can share with us, do these products also assist with, servicing bills? Let's say you're a single parent, now you're ill and unable to work, and maybe you are running your own business, so it's not even like you're taking sick leave and still getting a salary.
Great question, especially for business owners who are not necessarily employed, for example, because employed people would ordinarily have what we call group benefits. And that would include life cover, severe illness cover, and capital disability cover. But if you're running a business, often that's the oversight that you have. You might have a life policy in place, but you don't have a severe illness. Then the question is, then how do you then fund your lifestyle? How do you pay your mortgage bond? How do you pay your vehicle finance?
Okay, and those are very good questions. So how does a person assess what kind of cover they need? Because obviously there's the affordability element, but when you consult with a client, how do you assess to say, okay, for a person like you, you should have 500,000 Rand cover or whatever the case may be for severe illness, which would be your cancers and those type of categories?
So what we in practice would do is to do what we call a financial needs analysis, right? So that takes into account, for example, your obligation that you have on a monthly basis, vehicle finance, loan accounts, credit cards, right? And the monthly installment that you would pay towards that. Then we do a calculation to say, if you were to be disabled or fall ill today, how much would you need to be able to service those obligations? So it's there's a sort of formula to determine the quantum needed for a severe illness cover. And that is informed as well by your lifestyle, living expenses that you would sort of be paying towards.
Why is this severe illness cover different from something like income protector?
So income protector would come in, for example, when you are disabled. and would cover a portion of your salary. Let's say, for example, you're earning 100,000 and you fall or you become disabled. Then the income protector would pay in at least or at most 75% of the 100,000 until such time at retirement or until such time you recover from your disability, right? That's the income protector. Severe illness, on the other side, cover for cancer, stroke, those type of illnesses that really prevent you to function your occupation or run your business.
Akhona, yes,
yeah.
thank you so much just for chatting to us. Unfortunately, we've run out of time, but yes, those insurances are there for those reasons. Severe illness, it can come out of nowhere, especially if it is a terminal diagnosis. How is that going to impact those urgent financial decisions? Make sure you are covered.